Hey, Bowtie Nation, Joseph Hogue here with what could be the best buying opportunity of the year. Nation, how many times have you heard or have you said, man, I wish I had gotten in on Bitcoin or some of these cryptocurrencies early? Imagine buying Bitcoin at $244 each in 2015, just 10 years ago, spending $1,000 and getting more than 4 Bitcoin that would now be worth $375,000, 375 times your money. In fact, one of the earliest adopters, when Bitcoin was just being minted and worth a fraction of a cent, a Florida software developer paid 10,000 Bitcoin for 2 Papa John pizzas, Bitcoin that would now be worth over $914 million. And crypto is full of these wish I had moments, but it amazes me that when the price is falling, nobody is taking advantage of that new opportunity. The major cryptocurrencies are in a bear market, and I'm going to show you why right now is the time to buy. I'll also highlight 3 ways to buy without investing directly in crypto, and one stock that is the steal of a lifetime. And crypto is crashing into that new opportunity, with Bitcoin and Ethereum down 20 and 30% from their October all-time highs. It's after a hell of a run up, as much as 60% over the last year and 400% return over the past 5 years. But folks, the reason why I am so bullish on cryptocurrency right now is, besides that acceptance of Bitcoin as a store of value, is we are coming into a new era of stablecoin payments and tokenization. With the passage of the Genius Act, which set up a legal framework for how stablecoins would be regulated, we have already seen a boom in payments, with global stablecoin circulation doubling in the last year and payments reaching $10 billion a month. Banks now have a clear path to develop stablecoins, digital currencies tied to the dollar, to use that for transfers that are going to be faster and less costly than traditional wire and other transfers. The global money transfer market alone is $7 trillion a day, with McKinsey forecasting stablecoins in circulation to reach $2 trillion by 2028. That is growth of 8 times in just the next 2 years. But then that's just stablecoins. Tokenization is putting investments like stocks, bonds, and real estate on the blockchain, making it faster, safer, and less costly to buy or sell any investment. Robinhood Markets has already tokenizing some US stocks, and the NASDAQ exchange has filed to tokenize the stocks on its market, a move that would kickstart tokenization, keeping the markets open 24/7, and take this part of the crypto universe to $19 trillion by 2033. Nation, the role of cryptocurrency in our world is now undeniable, and you cannot afford to miss these sell-off opportunities when they do come along. So I want to highlight those 3 ways to invest. First up is through the crypto treasury companies. Now, these are companies with their sole focus of holding that cryptocurrency on their treasury balance sheet. Here we see the capital structure for Strategy, ticker MSTR, using convertible and preferred debt or loans to buy Bitcoin, now holding over 640,000 Bitcoin as of its most recent quarter end. Now, I'll admit, I have not always been a fan of this kind of investment in those shares of treasury companies, but right now, after the sell-off, they are a way to leverage your return higher on any crypto rebound. And this chart helps show what I mean. The gray zone here is the total value of Bitcoins held by Strategy, that ticker MSTR, over the last 2 years, growing to about $70 billion as of July. The blue line, though, is the value of the stock, the enterprise value, which is all the value of the shares in the market minus its cash. And you can see this has grown much faster than the company's Bitcoin holdings. Now, that fact has never made sense to me. The company does little or no sales or earnings in its legacy software business, so holding Bitcoin is all that it does. And so it's always baffled me that investors would be willing to pay more for the stock than the Bitcoin holdings were worth. In fact, you see it clearly in this red line, showing the stock value multiple on its holdings, so how much more the stock is trading for than just the holdings in Bitcoin. At one point in November last year, shares of MSTR were worth 3.5 times the value of the Bitcoin held in its treasury. But here in the chart of Strategy, MSTR, we can see that extra premium, the extra investors are willing to pay for the shares of Strategy over the value of its Bitcoin, has evaporated in this recent crash. The company now holds 700,000 Bitcoins, worth $57.9 billion at the current market price, just under $92,000 each. And yet the market cap of all the shares is just $54 billion. That premium is now actually a discount, so buying a share of MSTR means you're getting those Bitcoin at less than the price of buying them directly. So now the thinking here is, what happens when that price of Bitcoin rebounds back to the high of 126,000 and even beyond that? We're going to see that premium return on those shares of MSTR. Maybe not to the 3.5 times those Bitcoin holdings, but even to a premium of 2 times would mean the stock would more than double from here. The market value of MSTR's 696,000 Bitcoin would be worth $87 billion at that high. Then at the 2x premium, that premium on its Bitcoin holdings, the stock would be worth $174 billion for a 223% return. And as big as that opportunity is in strategy, I also like Bitmine Immersion Technologies, ticker BMNR, the Ethereum treasury company. Now, Ethereum is going to be the big beneficiary of this stablecoin and the tokenization boom, and it's going to play into my favorite investment later. Bitmine now holds over 3.5 million Ethereum, worth over $10.8 billion, and around 3% of all Ethereum in circulation. The company's chairman, Tom Lee, is calling for a supercycle in that coin, could see 100 times rise in the price within the next 3 years. Another way to invest, and maybe a little safer than those treasury companies, is through the thematic ETFs that hold shares of crypto-related companies. Now, this goes along with the same lines of why I like the gold miners, so stocks of mining companies, versus holding gold directly. Just holding gold, you get no interest or return until you sell it, but then investing in those gold miners, you're buying a business that is generating earnings and paying those out as dividends. It's the same way with these crypto companies, investing in the platforms and the players that are actually making money to drive their stocks higher. First within these would be the Amplify Blockchain Technology ETF, the ticker BLOK. This one's going to hold stocks within that crypto universe, so somehow related to cryptocurrency. With any of these, you can go to the website and you can look on the website to see the holdings, how it relates to cryptocurrency. And what I like about these, here you see it holds 55 stocks related to cryptocurrency. But within this, you can scroll down and you can see the top 10, or we'll view all holdings as well. But you can see within these, it's got the platforms. So Robinhood Markets, it's got Coinbase, they're trading in cryptocurrency. It's got the miners like Hut 8. It's got CleanSpark in there. So it's got those stocks that are very closely related to cryptocurrencies. But then it has a much more broader, diverse set of companies as well. IBM, International Business Machines. It's got PayPal Holdings, which has its own stablecoins. Not quite sure how Bed Bath & Beyond relates here. Maybe it has some treasury company holdings there in cryptocurrency. Roblox, also a little bit less related, but they're within that. Then you've got some powerhouse financial names like the CME Group, the exchange there, BlackRock, the largest asset manager in the world. These companies will benefit as they bring cryptocurrency onto their main businesses, but it is very tangential to a cryptocurrency. So something like this block, this BLOK, is going to benefit as cryptocurrency rises, but it's probably not going to rise quite as much as some of the direct exposure, like those treasury companies, like direct investment in the cryptocurrencies. But again, it's not going to crash along with the crashes we see in cryptocurrency. Some of the other thematic ETFs I would be looking at would be in the CoinShares ETFs here. And you can go to their website, scroll down here to find all their ETFs. The WGMI, the Bitcoin mining ETF. Obviously, that's going to be investing in Bitcoin mining companies. So we can click through here and see the page for that, as well as the holdings. You're going to see it's investing across those mining companies. Cipher Mining, you've got Iron, so a lot of the data center, a lot of the mining companies that are not only benefiting from the rise of cryptocurrency, but also from AI and that demand in data centers. You've also got some of these ETFs with a direct investment in there, like the Bitcoin ETF, the BRRR, that invests directly in Bitcoin. You've got the BTF, which invests in Bitcoin and Ethereum. Really like this one for that mixed approach between Bitcoin and Ethereum. You can click through here and see what it's holding, and it is holding futures, I believe, futures in Bitcoin and Ethereum. So yep, it's investing in Bitcoin futures as well as Ethereum futures, really getting that direct investment, that direct exposure into those. The rest of its money, the cash it holds in treasury bills, getting that safe return on there. So it's basically directly following the price of Bitcoin and Ethereum. And another one in the theme here, this altcoins ETF, the DIME, is a basket of a lot of the other altcoins that you might not have exposure to otherwise unless you're on Coinbase or one of those direct trading platforms. But this one is going to give you exposure into a lot of these other altcoins: Cardano, Atom, Solana, Avalanche, a lot of the altcoins that are going to benefit from that stablecoins and tokenization theme. Okay, a lot of the other platforms, the chains that might be used to build these tokenized assets as well as stablecoins. I'm going to show you that one best stock to buy next, but a lot of investors still do ask me if cryptocurrency is a good investment, wondering if it's actually a thing or just signing up to get rug pulled by some dude named Moondog69. And I'll admit, I was not always positive on crypto. Some of my first videos here on the channel were when Bitcoin was spiking in 2017, and I was recommending investors to avoid it. Like so many others, I didn't understand that cryptocurrency has real advantages if you know what you're investing in and how to avoid those hype-driven traps. First among those benefits is crypto does offer diversification outside of those traditional markets like stocks, bonds, and even gold. Stocks and bonds have been moving together over the last few years, meaning bonds really haven't provided that traditional safe haven status. Bitcoin, though, as a kind of digital gold, is helping to smooth out some of the risks in the stock market. More importantly, though, is crypto has real use cases in smart contracts that are powering AI agents, payments, digital identity, and prediction markets. This is the driver behind creating that digital dollar with stablecoins that is going to speed up transfers and lower costs. My favorite way to invest, though, and a 76% opportunity with the strategy I'm going to show you next, is the iShares Ethereum ETF, the ticker ETHA, which holds Ethereum directly. So you're going to hold the fractional coins here, buying pieces of Ethereum, which is now just over $3,000 each, for just $22 per share. And all of this goes back to that coming era of stablecoins and tokenization, where Ethereum dominates as the blockchain of choice for transactions. The global payment system and investment tokenization is going to be built on Ethereum, and that's going to drive up this price. Maybe not to Tom Lee's 100 times its current price, but I could easily see Ethereum at $30,000 in just a few years. Now, why I say this, iShares Ethereum Trust, the ETHA, or really any Ethereum ETF, is the opportunity of a lifetime, is using an option strategy called the covered call, using that to get a huge discount on these shares, a multi-low price on the shares, and still that 76% and higher return. And we can see here the shares are trading right now about $21.60. Here, if we go to the options available on these and understand what we're doing here is we're going to be selling call options on the stock that we own here. So we're going to be buying the ETHA. We're going to sell call options against those. We can scroll down here to different expiration dates for those call options. I know a lot of this is kind of like a foreign language to you folks. I'm going to help you out with a course in options investing next. But here we're going to go down to the January 15th, 2027 options. So these call options give an investor the right to buy the ETHA, the right to buy this ETF for this price, the strike price, $5, $10, $15, $20, whatever the strike price is. Give them the right to buy it at that price if they pay this last price, this premium right now. Okay, so what we're going to be doing, we're going to be buying the ETHA for $21.65. Then we're going to be selling another investor the right to buy these from us for one of these prices, for maybe $20 here. For example, if we buy the ETHA and then sell another investor the right to buy those from us at the $20 strike price here through 2027, through January 2027, then they're going to pay us that $8.40, okay? They're going to pay us $8.40, and look at what this does for our investment. Okay, with $21.65 right now, we pay $21.65 for the stock minus that $8.40 in cash we get back. Our actual cost is $13.25. Okay, $13.25. We can see here that has not been that cheap since the huge crash in April of this year. Okay, the April crash on the tariffs made it down to about $12, $11 per share. We have an opportunity here to get it down almost to the very low there and down around $13 per share. Okay, so with this strategy, we get a giant discount, $13.25 divided by 21.62. That is a 38% discount. So we've got a 38% cushion to this stock. This stock tied to Ethereum could crash another 38%, and we would not lose money, okay? Because we have the cost basis of $13.25. But look at what happens here. If Ethereum does rise, it does stay above, even stays above that $20 per share. In January 2027, when this investor that bought those call options from us, they're going to buy it from us. They're going to buy the stock from us for $20. That's what that call option allows them to do. Allows them to buy it from us for $20. So they pay us $20 divided by the $13.25 that we are on our cost basis. We make a 51% return. Okay. So in effect, we bought these shares. We sold someone the right to buy them from us at a later date, and we collected that money. So our cost was $13.25, really. We got that 40% discount on the shares and a 40% cushion on the shares. And if they just stay up above $20 by next year, we're going to make 51% return on those. But now, maybe if you're like me, you're quite a bit more bullish on Ethereum. You think not only is this going to stay up above 20, it could rise easily to $30 a share or more. What you want to do in that instance, you want to buy the shares here again for $21.60. If we go down here to the $30 call options, again, this means that another investor is going to pay us this $5.22. This strike or this premium going to pay us $5.22 to be able to buy the shares from us for $30 into the future by January 2027. Okay, so we're going to pay $21.60 for the shares. We're going to get back $5.22 of that when we sell that call to another investor. That means our cost is actually $16.38. Okay, $16.38 divided by 21.55. We are getting a 24% discount. Okay, this shares of this could drop by 24%, and we would still not lose money. Okay, because we had lowered our cost basis with those. Let's see if it does go up to that $30. So we bought it for $21.60 minus the $5.22. Remember, our cost basis is $16.38. If it goes up to that $30 strike price and that investor does buy those shares from us for $30, 30 divided by 16.38, we will make 83% on that in 1 year. 83% return. All the stock had to do was go up to $30 from $21.66 here. All the stock had to do was go up 38%, and we made more than 80% return on it. Now, that's not the only option strategy I use with these stocks, but I know options can be like that foreign language, very confusing. So to help you get started, really understand how to use these options to not only increase your returns and protect your portfolio, but also to create income, check out the link below for our Ultimate Options course. In it, I start with the basics, then walk you through 29 option strategies, when to use each, and how to set it up, including a real-world example with shares of Tesla. The course also comes with a one-of-a-kind strategy finder to help you find the right option strategy and an options calculator to show you exactly how much money you can make. Use the link I'll leave in the description below to get $150 off, a 38% discount. You're going to get all the basics to get you started, the strategy finder to make sure you're using the best strategy, the options calculator to show you exactly how much you can make, walkthroughs on all 29 strategies, and a 14-day money-back guarantee. Now, that $150 launch discount is only available with the coupon code I'll leave in the link in the description. So check that out or just scan the QR code here. Get your $150 coupon and start using options to boost returns, protect your money, and create income with the Ultimate Options course. Everything you need to get started and a 14-day money-back guarantee with the link below. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.